Aloha, lads and gents. Welcome back to another episode of Crunch Time by A Sense of Capital. Your host of today is again Julian. Very nice to have all of you in today. So just if you are interested, again, sending live out of Germany, out of somewhere out of nowhere on the countryside. It's 9:56 p.m. CET time in Germany. Roughly 24 degrees. The air is conditioned in the meantime, not like on the stream on Monday. And yeah, today there's another occasion for having the Crunch Time episode because of the financial results of StoneCo or Stonia, how the local people are calling it. And yeah, I'm very happy for having you in. First of all, thank you very much for all the ones who have subscribed after yesterday's live stream about new bank, new holding. I'm still quite happy with the results, but that's another story. Today we talk about another company, a Brazilian company. Yesterday it was more focused on the growth side, on the expansion side, regionally, on the customer side. Today, and this is what you can see at the headline of this thumbnail of the stream. It's really about the profit side, about from my perspective, can StoneCo be back on the stage in terms of being a cash machine? And that's the reason why I use the cash register as an image, as an icon in this regard. Okay, great guys. Before I step in, before it's getting seriously, I of course need to address somehow the disclaimer to you. And so again, I am not a financial advisor, not at all professional. I'm just an authentic dude who tries to get a little bit closer to the capital, business and financial topics and get a little bit more familiar, and maybe I can support you as well by doing this kind of self-reflection. It's again, no advice. It's up to you how you invest your money, how you do your assessment, your due diligence. It's your life, and therefore make sure that you decide by your own and not just by what I'm telling you. And of course as well, there's no guarantee for correctness. So I try my best to give you the most up-to-date and high-quality data I can fetch up together. But again, I can't promise you anything about all what I'm stating here. So time for the first zip for this call. Just to catch up to the yesterday's call. Actually, I switched on the stream 1 hour too early. I'm not sure if the original new holding call was postponed and the release of the results. Anyway, the result for myself was that I needed to cover 2 hours of live stream, which was quite intense. Thanks again to Gary and to Mark that you subscribed, and even more beside the subscribe that you somehow covered my back and we went through this situation together. So highly appreciate this again. So greetings to Washington DC, and hope you are satisfied as well with yesterday's results. Before we step into the numbers, and as I mentioned already yesterday, I hope that this time they will get released very soon after the market is closed, and the market should get closed any minute right now. I want to introduce you a little bit more about StoneCo, or as I mentioned, Stonia. I will just call it StoneCo for right now because I guess a lot of people in the Western world, at least in Europe, they pronounce it StoneCo, even if it's not right. I will keep it like this. So StoneCo. And so what is actually StoneCo? Maybe to step in a little bit further, I will share my screen. Will share my browser. Let me check if it's working. Yeah, that looks good. So basically, StoneCo is separated in 2 major businesses, from the core. One is the original old economy business, which is the point of sales hardware, as you can see here, hardware and software supply business, which means they offer for retail stores, for instance, for hotels, payment solutions, ERP solutions, financial services, which is actually, as far as I know, the main driver in terms of profit, which results out of the StoneCo activities. And the second biggest part, next to this point of sales activities, is resulting out of an acquisition they managed roughly 2 years ago, I think end of 2021, beginning of 2022. They acquired a company which is called Lynx. Lynx is as well a Brazilian company, StoneCo as well too. Maybe I didn't mention it. StoneCo is highly focused on the Brazilian market. Lynx is as well present in other regions in Latin America. And what is Lynx doing is basically they offering more the software part for retail businesses and other businesses, like ERP system solutions, like ware software solutions, like CRM solutions, so customer relationship management solutions. And I guess the purchase or the acquisition from Stone to purchase Lynx was, in my opinion, not the worst idea, basically, to get some kind of or achieve some kind of synergies. But at the same time, as far as I can see it, the synergies are not taking place too strongly. But I'm quite confident they will take place. Of course, acquiring a new company, which was, as far as I know, the biggest acquisition in Brazilian history, actually, by acquiring Lynx, the company Lynx, which you can see here. Let's share again the screen. Everything a little bit more in Brazilian language, but I can make a quick translation for you guys. So you can see here, for instance, in pharmacies and petrol stations and all of this kind of sectors and stores, when the people have their cash register, they have a screen in front of them, the service personnel and the service staff in the stores, and they're seeing a screen. A lot of times the solutions in Brazil are supplied by Lynx, actually. And the point of sale hardware as well, a lot of times of StoneCo or Stonia, as I mentioned. So that's basically what we're talking today about. To give you a little bit more color to this topic, we're talking here a little bit more, as you already can, or as already very likely you're assuming, as we're talking about a B2B, business to business business case. Yeah. So they are in the core segment. They are not offering any solutions to private persons like me or like you. But when you own a business, if you own a store, if you own some kind of a branch, then it's very likely that in Brazil somehow you reach out to StoneCo or to Lynx, if you need some kind of supply in this hardware and software district. Maybe to give you an idea, when we talk about the turnover ratio of StoneCo, the mother company, to Lynx, the acquired company, StoneCo is doing basically with the financial services 85%, which consists out of payment processing, which is basically digital banking and credit solutions. And when we talk about the software part, it's just 15%. Yeah, so ERP, CRM, and e-commerce, so e-shops, digital shopping. The stock itself is listed on the stock exchange since, let me check this again, but I think it's 2018. Yeah, I'm right, 2018. You can see here the chart of the past, roughly 5 years, And let's go back a little bit more, and you can see that, and it's actually Buffett back, the same like the stock we talked yesterday about, New Holdings. So Warren Buffett, one of the, of course, most famous, most popular investors of the current decade. He is investing in New Holdings, the Brazilian company, fintech company we talked yesterday about, and as well in StoneCo. Of course, compared to the overall portfolio, which is held by Warren Buffett and the other shareholders, of course, it's just a very small, tiny portion. But compared to StoneCo, from the percentage, it's not that small at all. But you can see, so it started quite well when we talk about the IPO, the initial profit offering. In the end of 2018, it raised and performed quite well. Of course, as well, covered and backed by the Corona pandemic times. Peaked in roughly February, so first quarter 2021, and then went down very, very, very heavily because, let's keep it very superficial, guys, but they had some trouble, did some re-evaluation, did some bad business moves, let's say it like this. And this is what you can see as well when we talk about the financials, just that you have seen it. 4 billion is the current market cap in US dollars. But you need to know, when we later on switch to the earnings report and to the results, luckily it's stated in English language, but unfortunately it's all the numbers are stated in Brazilian real, which is the local currency in Brazil. You can see here, that's the chart of the roughly last 5 years. Since 2020, it's quite stable. It was not always like this when we see the chronic of the exchange rate. But just that you have heard it, the Brazilian real US dollar exchange rate, of course, has a big impact as well on the success of an investor outside of Brazil, who's not trading in Brazilian real, like me, for instance. And you can get, for $1 US, you get currently 5 Brazilian real. That's the exchange rate. So back to the numbers, what I want to show you and what we have seen just a few seconds ago in the at the chart, and the price chart, is that everything went quite well for this company. When we just take a look on the focus numbers, earnings per share and overall revenue, everything worked quite well. And then they had that trouble and went down heavily, as you can see here. Some naughty things was going on, from a really strong earnings per share of 1.16 by 1 billion quarterly turnover, which is again in Brazilian real. So guys, take care if I'm not mistaken, but I'm quite confident it's Brazilian real. They went down heavily, even into the negative side. And as well, the overall turnover as well, was highly impacted on a negative way by this development, by this circumstances. And since then, so now they try to achieve this kind of rebound, this turnover, this comeback. They really need to try to accomplish this. And it's difficult, of course, if you have a certain standing on the stock market, if people somehow burned their hands by investing in StoneCo and somehow it didn't work out well for them. Now it's, of course, very difficult for them to get up and recharge their batteries and get the horsepower back on track, back on the road. And this is what they're actually doing, in my opinion, now. And as you can see, with 1 billion, to already step a little bit closer into the numbers, in the past, roughly 2 years ago, with 1 billion turnover, they achieved an EPS. Okay, it was this Corona after times and everything worked well, cheap money, but they achieved an EPS of more than $1. One Brazilian real. Let's keep it in Brazilian real, even if I have no guarantee. Let me check later, or let me quickly check before I tell anything wrongly here. Let me check quickly on the site, the financial results. You can see it as well if you like. It's working here. That's the Q1 results. And let's see how they're stating their results. And yeah, you can see here. So it's actually Brazilian real. So yeah, if I should now, I just want to disclaim it one time, and mention it. If I am completely wrong, please don't joke on me. Maybe it's US dollars, but I'm quite confident that what we see here, of course, is Brazilian real. And what we can see here as well, because it's, again, you can see it here, 2.7 billion is as well Brazilian real. So let's just think, or let's assume it's Brazilian real. Okay, let's go on. I need to recharge my battery as well, guys. All right. And now they're recovering, actually, like a patient in a hospital, in a clinic, at a doctor shop, whatever. Now they took, in my opinion, the right medicine, tried to find a new course where they should navigate to, and that's what they're doing currently. And so everything is going into the right direction. Turnover is somehow resurrecting and getting reinforced, and as well the earnings per share. And just imagine, I mean, that's the reason why I'm talking about cash machine. Yeah, will this be a cash monster? Will this be a cash machine? With 1 billion turnover, they get more than 1 EPS in the past. And now we are already almost hitting, maybe we are hitting today the 3 billion turnover, guys, yeah? Maybe we not cross this number, but we're getting very close to it by the forecast, by the guidance and expectations for StoneCo. And just imagine, I mean, in the past, 1 billion turnover was $1, 1 Brazilian real per share. We can multiply it with 3 when we talk about today's niveau of 3 billion Brazilian real. And so there's a lot of room for improvement in terms of getting back to a high level of profit per share. Yeah, that's just let's keep it basic and keep it simple, but my superficial assumption in this regard. Yeah, for me, I really want to set the focus on profit when we talk about StoneCo. And I'm quite confident there's a lot of room for improvement and a lot of potential left, especially when we talk about that at the end of last month, if I'm not mistaken, that the local central bank lowered the interest rate because of lower inflation rates from 13.75 to 13.25%. So they are a little bit ahead compared to the US Central Bank Fed, to the European Central Bank ECB, which we expect in our markets we will stay stable. In terms of the inflation rate, they already lowered it because I think their inflation rate decreased already from 12% to 4% lately. Yeah. So we'll come back later to this topic, maybe cover it on the side, but that's a really important aspect. And of course, lowering the inflation rate is definitely some kind of a driver for the natural demand, especially in the regard of financial services and products, which is StoneCo, of course, offering as well, like I initially mentioned. Guys, so let's go back to the chart again. And as you can see, since 2021, it's quite stable, and actually that's my third largest position by roughly, I think, 7,000 euros, and a little bit more like $8,000. And when you zoom in year to date, it's not even looking that badly. You know, it looks on the long-term chart, it looks very, very stable. But somehow, when we zoom a little bit in more and take a look on the details, year to date, so beginning January, the price was roughly on $8.5, and now it's already, how much up? Don't know, but $13.6 US, you know, so quite a lot. So roughly $5. Actually, I'm up as well by 40%. Initially purchased it in March, somewhere here. Was quite lucky. Actually, I had it in mind, this company, did some superficial research, and then I figured it out for myself at least. It's a good catch. I can live with the risk acceptance requirement of the stock. I know what I'm doing here. At least I expect I know what I'm doing here. And so that's the reason why I invested. And I invested a little bit even further and further. Yeah, so that's the reason why my position is quite large. I'm still quite confident for this position. And as I mentioned, we're talking about overall $7,000 or 7,000 euros or $8,000. Okay. Let's check again let's start by if the financial results are already released. Yeah, they're already released, guys. We are completely late. It's a mess. But anyway, I will stick to the schedule. I will stick to the schedule, guys. I don't even will now share with you the current after stock market price, because I don't want to have any that you get nervous or something like this. And I'm not getting nervous or too excited or something like this. I just want to go on with the procedure which was planned. And therefore, quickly, let's check. And I will share you for this a slide I have prepared for this call, especially. Let's check what is important for today, for the call, where we should set the focus. And as always, of course, revenue and EPS development is a catch. But as I already mentioned, earnings per share is definitely, for me at least, at the focus. Or of course there is a ratio, and if the turnover, the sales is getting larger and higher and gets pushed forward, it has a positive impact and strong positive impact as well on the profit profile of the company. But for me, it's very important that we definitely catch the EPS level. And what's as well, I separated in the short-term metrics and parameters, mid-term and long-term. Just the short-term are now very important, and I keep it very compact because we need to go on and check the numbers. So short-term, as you can see here, they want to roll out more the acquisition of micro, small, medium businesses. Yeah. So actually, there's one big competitor which is stated further below later on, which is called PagSeguro, absolutely major competitor in this market in Brazil in terms of POS solutions and especially in financial services. And they are quite present at the MSMB, so micro, small, medium business market. They are quite present over there. And not so heavily in the key account business, so in the larger ones, larger customer base. And it's a little bit more opposite, just a little bit more opposite when we talk about StoneCo. StoneCo is quite strong in key accounts and still, of course, strong in MSMB, but there's room for improvement. And so now they're focusing higher the MSMB market. And so therefore, for me, it's really important that we take a focus on how the acquisition of the MSMB market is going on, the positive impact on the TPV, which is the total payment value, and of course on the overall profit. And I have a few numbers which we will check later in the report and hope and keep fingers crossed that the results are in line. Okay, so guys, I will check quickly if someone is watching. Yeah, we got three viewers. Guys, all of you, thank you very much for joining. Thank you very much for catching the emotions, catching the experience together. Use the chat if there's a need. I try to check here and there the chat, even if I'm not checking it each minute or whatever. But highly appreciate that you have joined and spent some time. And very lucky you know already the numbers. I'm still sitting in the black box, not only in the dark night, in the dark colored car basically from the outside, but as well in the black box when we talk about the numbers. But we will release the information very soon here as well in the stream, I think. Okay, let's go on. So another aspect is the rollout demand of financial services. So as I mentioned, they had some trouble, especially with the financial business, and that is where, and especially as well, of course, the high interest rate is not supporting as well so much in this regard, and therefore, let's see how they will reactivate this business sector and roll it out, and somehow execute here and use this dynamic. And the third point we talk about today, because it's just about the other point before I mentioned, when we talk about the rollout demand of further financial offers, that's, in my opinion, the potential key monetary driver. Yeah, that's definitely something which is making the money. Of course, there's some advertisement. Of course, there's some other fees they're charging at their client base, but financial services, yeah. So, and the certain take rate, for instance, is definitely something very, very interesting, or even providing some other financial products. Yeah, so that's definitely an aspect. And the last one is the integration, the margin of the software division, because, as I mentioned, especially driven by links. So as I mentioned, in my opinion, the synergies are not touching the surface at the moment and didn't break through too heavily. Just my personal opinion, and I think there's so much potential left actually, and I just want to see that the integration is going to the right direction, and especially the margin is increasing, because I think, if I'm not mistaken, let's check again. let's check again the report. And the report, I like the report actually. It's quite well structured, and they even stating here the Q on Q and not only the year on year growth or ratios and development. So that's great. But you can see here that the adjusted EBITDA on the software side even felt a little bit apart year on year by minus 0.9 percentage. And I really hope that we somehow turn this into the positive way, and not only the core business is somehow supporting the profit performance level of StoneCo, but as well a little bit more the software part. That would be amazing. And let's go back to the PowerPoint chart. And what is as well interesting, of course, the participation of the interest rate reduction, what I've already mentioned. Then the competition to PagSeguro. PagSeguro is very similar to StoneCo in a certain way. As far as I know, they are a little bit established longer. They have a longer history in the market. They are a direct competitor for sure. But while StoneCo is setting a higher focus on the software side and providing more e-commerce solutions, etc., so a little bit more the Silicon Valley style, maybe if you want to frame it like this. PagSeguro has their point of sale solutions like hardware terminals, payment terminals, but as well they are very, very strong in financials, in financial offers, financial banking. And the major difference actually is that StoneCo doesn't have any banking license while PagSeguro has. And therefore, PagSeguro can act on their own, and StoneCo need to cooperate with more established old economy businesses and bank institutions in Latin America and Brazil. Which of course is a certain, somehow they are affected by it. So there's a certain level of dependence, maybe, to this old economy banks. Not sure, but I think they're cooperating with one major bank, with one specific major bank. Maybe you make your own research if you are more interested in this topic. That's basically the fifth parameter, and the sixth parameter is definitely the potential and the outlook in terms of they have a certain a level of cash or stock cash level, and this level of cash is really the question how they utilize it. So for merger and acquisition, they always stating it at their reports. Maybe there is an option, maybe there's a chance, whatever. And they already had some acquisitions in the past. And who knows what could be the next catch in this regard. But definitely something where we can sharp our ears and take a certain focus on. And on the long term, let me open the next one. On the long term, 3 other points is the regional expansion. I think StoneCo itself, so just Stone here, is active in Brazil. Just the acquired Links business is present in other markets in Latin America. So there's for sure some potential left, but I'm quite sure that they set the focus on Brazil, especially the history was not always that positive and not always trouble-free. So I'm very happy that they set the focus right on creating a solid fundament, making sure their home market is stable, and then they go on and setting the next flags in new product lines and new service lines, and as well, of course, regionally in new markets. The exchange rate is something what we definitely need to keep in mind, and typical as well in Brazil, of course, the local economy and the politics. It's different to some other markets when you compare it to Europe, even Europe. Not everything is in perfect shape, of course, even if I'm not 100% expert in this regard. It's just in overall financially a little bit more stable in the past, and Brazil is way more affected, I guess, from, as far as I understand it, from political decisions, from political votings, and from new parties who step into the governments and this kind of aspects, and of course as well of more the global and local economical developments. Yeah, so that is something what we definitely need to keep in mind as well. Okay, guys, I think now it's time. One more zip before it's getting really dirty and it's getting serious. Now it's time to step into the numbers. Again, we have the focus acquisition MSMB market, positive impact on TPV and profit. Second point, rollout and demand of financial services and integration of the software division and the margin increasement which result out of it. So these are the points we want to focus today. And I would say we just very quickly go into the browser and check already. Wait, let's do this together and check how the stock is developing. Okay, guys, let's keep fingers crossed. Even if Hims & Hers didn't work out well on the long term, even if Noon didn't work out well. I mean, Hims & Hers was after markets 15% roughly plus. News was yesterday roughly 5% plus, and as soon as the market opened, both stocks turned somehow down. And this is again, it looks similar. So I think the numbers will not that badly, or at least we don't talking about a catastrophe, because the numbers, the stock is 4.5% green in the plus. So that's already very satisfying to see. It's always better for me to have a call with you guys with positive results than negative. Oh, now it's turning a little bit more into the negative. But let's focus now. Let's focus a little bit more. Check here if the numbers are already listed here. Okay, no, they are not. But however, we go right into the current most updated earnings release, which is here, as you can see. Let me check if you can see it quite clearly. Maybe I zoom a little bit more out. A little bit. Yeah, I think that should work out. Guys, okay, let's step in. Strong revenue growth. That are good first words, I would say, when we talk about result. But of course, they're not telling bad revenue growth. And above expectations of 3 billion revenues. Okay, that's already a good call. That's a good catch, because the guidance, as you can see, was set it on 2.9 billion. So we definitely have a beat over here, and we crossed the 3 billion mark. So lucky guys, lucky for us. Very nice. Just income looks as well quite very, very good. Year-over-year growth 28%. Very nice. Let's go in. Let's compare just quickly the both headlines to each other. And as you can see here, last year it was okay. It was last quarter it was 31% year on year. But of course, it's hard to keep this level on a certain stage. And just losing 3% in one quarter, I think, in my opinion, that's not that bad, especially when you're just active in Brazil, especially when there is some competition going on. If the economical conditions are not always very favorable, and so therefore, that's a box I need to tickle. Overall, revenue is very nice. Before we go in more detailedly in the 3 short-term parametrics we want to cover, I want to very quickly take a look at the guidance, which is very much interesting for me. And so in the outlook for, you can see it here. I prepared myself for you guys, so I hope you appreciate this. And so, guys, wait one moment. Let's share again the screen. The outlook looks as follows. Are we here correct? One moment. Wrong. Here. So here we are right. Total revenue 3.75. Okay, and I prepared the chart. I prepared an Excel tool for you, an Excel sheet. as you can see here, I think. And I will already copy the numbers live so we can somehow compare them and use them and not just see them and forget them forever. To be above million a year growth above. Okay, so 3 billion 75, which is okay. So the revenue. Wait, what I expected before I. Okay, actually, I need to tell you the truth. So maybe let me explain this quickly to you. If you already switched on the stream and you watched yesterday and have been a viewer, then you know already what I'm doing here. So I enter here the earnings results numbers and data from 2022 and 2023. And as you can see, I always try to create some kind of a difference. What is the difference between Q1 and Q2, for instance, 2022? And I expect that this we will reach as well, at least now, this year. So this year, 2.94 billion was this quarter was definitely what for me is my minimum to satisfy me as a shareholder. And with 3 billion, we definitely covered it. So I can enter it already. So last year, from quarter to quarter, the revenue had experienced a plus by 230 million, and this year by 290, which is great. But what is, in my opinion, not that heavily great last year from guidance to guidance, quarter 2 to quarter 3 guidance, it was raised by 300, and now when we add here just this 375. You can see it's just 175, the difference. So actually that's not that great. So guidance wise, honestly, when we talk about the forecast, I'm not so satisfied. Now I need to be honest here. But revenue, when we talk about the revenue, which they accomplished, or which they achieved this quarter, or let's say the last 3 months actually, I'm very satisfied with the guidance. I'm not so satisfied in terms of revenue. Okay, but overall that looks very good. And let me check again. And let's go back to the browser. What the chart is telling. So I mean, you never know what are the reasons exactly why after hours the price is raising or not. But in my opinion, so it's 295. So I will copy to 295. But that's still a beat. That's still a beat for sure. So let me correct this here quickly. Okay, so it's still year over year, as they mentioned already, more than 28% in revenue growth. And yes, that's great. That is what I would like to see here. They definitely beat the EPS expectations. Let me check what I expected. So because they last year, compared to the guidance, to the forecast, they beat it just by one cent. Is this correctly the currency? Just beat it by 1 cent. I just added that I'm happy if they can just catch up to the forecast. Of course, it's always good if they beat it like they did now with 0.94. Yeah, as well. That's for me absolutely in line. That's an year over. Oh wait, I need to be careful here. 1 moment. Screen is quite small. The night is quite dark. It's quite lazy, ladies and gents. So year over year raise of almost 300%, 276% up year over year. I think that's definitely a statement. So this quarter, 1 year ago, 0.25 cents per share, and now almost 1 Brazilian real, $1 per share. That looks good. So for me, really, revenue and the EPS results for this quarter are definitely satisfying. For me, we're talking about the cash machine. We're talking they are back on track, and the originally stated headline at this stream, at this thumbnail, is definitely covered, and the box is tickled. Both boxes are tickled, but in my opinion, the guidance in revenue could be higher. So I would see more here, like something like 3.2 billion. 3.2 billion. Oh, wait, I just didn't share my screen, so now you can see it. 3.2 billion would be a little bit more what I would like to see, but year-over-year revenue of more than 28% in revenue, year-over-year growth in terms of EPS of 276%. It's definitely a good catch. They beat strongly by 8 cents per share the expectation, the forecast, and that's fine. And now quickly step in. We are on the finish line, guys, but even if I already collected now a roundup, as I mentioned, I want to quickly go to the short-term conditions, and let's maybe focus only them. So acquisition, MSMB market, and positive impact on TPV and profit. So to cover this topic, we go into the earnings report. I hope at least I can see the numbers clearly and quickly. So what we are looking for at the first time or at the first glance is the active payment client base, which I want to see is close to the year-on-year development of Q1 to 2023. So let's go into the report. Sharing the screen. Going quickly in. Active client base. I hope you can see it. Wait one moment. Okay, it's a little bit more out. It's a little bit favorable. Okay. Here we can see it. Active payment client base. So we are living here. We're experiencing here as a StoneCo shareholder a year-on-year growth of roughly 43% in regard of SMMB, and this is the important metric for me, the important client base. And last year 47%, so it's a little bit lower, but just roughly 4%. That's for me fine. So for me, tickle the box is fine. The key account growth rate in opposite, it's very different, so just take a quick look. Even if we don't want to focus this too much, it growth by 12%, and this year just 2%. So that is not that strongly. So key accounts, somehow they pushed on the brake pedal. Who knows what is the reason, and if competitors getting a larger share, or if StoneCo losing share, or just the somehow the key accounts are stepping back a little bit and setting their budgets on other focuses. Can be the case as well. But however, key account base not that great. But however, the MSMB, the micro, small, medium business market is covered quite well year on year. So check the second KPI, which is the TPV, the total payment value, and you can see it here as well. And again, a focus on MSMB, roughly 19% up to the last year, and here 24. So again, it's lower. There's no question about it. It's lower, but of course it's just the total payment value. So I mean, it's not just is definitely the wrong term I'm using in this regard, but I don't think that it's that heavily impacted. Yes, we're talking about 5% down just on the year-on-year growth. But on the other side, let's see. Look, when you see quarter on quarter. But okay, let's don't forget this, please, because I don't want to talk about quarter effects. Maybe there are seasonal reasons why it was negative one quarter ago, and now it's positive. However, okay, that's fine. I would love to see a higher number, but that's okay for me as an investor. But here as well, there's a huge difference in terms of, so the key accounts further decreased. Last quarter year on year was 26% minus, and now it's 32% minus. So I think really some key account stuff is going on. I'm not too deeply into it, but doesn't look too great for me. Just my personal opinion. Okay, and next KPI we want to focus is the take rate. So just for your explanation, the take rate is basically, you can call it as well, the transaction rate. Yeah, so when they use their point of sales hardware, transaction terminals, and there's some transaction rate going on, some take rate. What is the take rate? And of course, as well, we want to see here a good take rate, a higher take rate, or we rather like to see a higher take rate than a lower take rate. So let's see here. Look here. That's the reason why I like the structure of this report. It's quite structured on a very transparent way or level. Okay, and what we have here is now a take rate of 2.48%, and you can see it here already on the first glance. It was last quarter 2.39%, and 1 year ago 2.09%. So that's great. That's definitely a plus. Higher take rate by 0.38 percentage points. Great to see. And even here on the key account side, at least year over year, it improved in the right direction. So that's a very nice result. So to fetch this up, to sum it up, when we talk about these short-term parametric acquisition MSMB market and positive impact on TP and profit, yes, the growth is a little bit slowing. The TPV is going, the growth as well is going lower, but it's still growing quite strongly. And at least the take rate is increasing in a nice way and still growing. So I think, in my opinion, that's, for me at least, if we would give like the traffic jam flags, the traffic lights, red, yellow, green, I would give this a yellow. Let's keep it as a yellow. Yeah, and maybe I need to add some kind of a rating structure to my reports in the future. Let's see. I make definitely a note and keep this in my mind. But revenue, in from my point of view, is green to yellow, like a little bit more green maybe. EPS is for me green. Yeah, so it's positive. This one is yellow, in my opinion. Rollout demand of financial service, to cover this metric, and the second last metric, and then I will switch off the stream, is the MSMB active banking client base. Yeah, and here we want to see results close to the year-on-year growth as well of the last quarter. So check this out together. Let's go back to the report. Active bank. So give me a minute. And that's the KPI we are looking for, as you can see. So the growth, that looks good in my opinion. 218% year over year, and 33%. That could be something. Let's check. Yeah. So that's a strong one. No doubt about it. So last quarter year over year was 146. Now roughly 218%. That's definitely a plus. Even if the that no doubt about it. So that's just, in my opinion, a very good one. And when we talk about the true numbers, here it's 1.25 million, and now we are already talking 1 quarter later about 1.67 million. That's great. Another metric, in my opinion, which we need to take a closer look, is the MSMB client deposits. And let's go back to the, and it's directly located underneath it, below it. So as you can see here as well in Brazilian real. So a growth of 44.9%. And okay, so that's definitely a difference. Yeah, so just almost twice the level was accomplished last quarter, year on year at least. So let's talk about the overall numbers, which is 3 billion, okay, 4 billion roughly, and 3.6. Okay, it's developing. Let's keep it like this. It's developing. Honestly, guys, as I mentioned, I'm not a high professional, so for me it's a neutral. I don't want to evaluate this. I think it doesn't sound positive for me. So maybe we should keep it a yellow to red traffic light. Yeah. Yeah, let's keep it like this. So when we talk really about the it's 3.9 and 3.918. Okay, I really even missed the column, the row. And okay, yeah, okay, that's for me doesn't sound positive. I need to be honest, that doesn't sound for me positive. So we have a very clean green one here with the client base, which is amazing, with 218% growth from my perspective. But in opposite, compared to the client base, the client deposits overall, they are just quite strongly, and yeah, not so positive. Okay, so give this, we have let's say a more red one and a more green one. And when we talk about the rollout and demand of financial services, I give it a yellow flag. So first one yellow to green, this one is yellow, and now the last one, which is the integration and margin increasement of the software division. And that's quite simple. Let's just check what is the software revenue and what is the software adjusted EBITDA. Yeah. So yeah, I'm very curious about this. And I hope they can put some piece or links, and in general the software sector of StoneCo can put some puzzle to the overall image and somehow support the result. Okay, let's go back. The last metric for today, which we will screen together, and we can just go up again. Total revenue 9%. Okay, at least it grows somehow. So when we compare it to 28% overall revenue, of course they are not that great and supportive, but at least they are a little bit supportive. And so yeah, last quarter it was quarter on quarter 9.7%, and now it's 9.2%. Yeah, so on a solid, consistent base. I would love to see more, but okay, that's fine. At least it's not decreasing too heavily. And of course, let's see the adjusted EBITDA. And that looks good. I think that looks good, guys. It's good. If that's the last parameter we take a focus on today and the last one looks good, then I'm happy. So we can see here 25% up. And I think, yeah, you can see that's good. Last quarter it was minus 1%, and now it's up 25%. So that's definitely good. So I think the software part is getting a little bit more favorable in terms of profit and creating additional source of cash flow and cash base. And I'm happy that it's profitable. It's getting more and more profitable. And as you can see here, we're talking about 66.5, and now about and last quarter about 40 million Brazilian real. Okay, that's good. That's good. So when we catch this up and put this into the third position, the third metric of the short-term focus we have, or I've set for this call, then I need to say integration margin increasement of the software. The revenue development is not that great. Let's state it as solid. Yeah, we can, or I rate it as solid and maybe yellowish, but the margin increasement is definitely great, and therefore, and that's important for me, as I mentioned, I set the focus on EPS, I set the focus on profit growth, and therefore I give this as well a yellow to green coloring in terms of the traffic ranking. So first one, yellow to green. This one, I think it was a yellow one, if I'm not mistaken, and this one as well, a yellow to green. The revenue was yellow, green, maybe green. We can tick this box, and EPS was quite strong. So I'm very happy with the results. Let's check again the final last time. The price, you never know if it's getting reflected in the right way or not, or if I'm right or not. As I mentioned, there's no right or wrong. I need to tell, when we talk about this call, you can see roughly 3% up, so that is definitely not too strong impact. Otherwise, on the other side, markets are suffering at the moment, as far as I know. I didn't check the prices today, but yeah, you can see minus 1.1%, and the overall tendency of the stock prices are not supportive for the earnings, which are now ongoing, in my opinion. So therefore, it's great that it's up again. The same like HIMS, the same like NU. The results are definitely not somehow negative, and I'm happy, guys, with as a shareholder with the results. I'm happy with the revenue development. I'm happy with the EPS development. I'm happy with the key KPIs we went through. In my opinion, the MSMB market is heading into the right direction. The rollout demand of financial service getting reactivated and heading in the right direction, and as well, the software division is adding some plus to the profit side and the EBITDA side, and I guess I have the feeling, at least, that the company and the management is doing some stuff well. And when we go back to what I've mentioned at the beginning of the call, that they had some kind of a trouble-filled and stuffed history, StoneCo, in my opinion, they're definitely finding back on track, finding their rail to the target of profit, of revenue growth, and especially with the background that they are working with a very low, or compared to other companies, at least. Of course, talking about Brazil companies, there's always some little bit different rating about these companies, like companies from the US, for instance. But we're talking about a quite low price to sales ratio, earnings to sales ratio, price to free cash flow ratio. When we keep this in mind and the results are really heading in the right direction, I'm very happy to be a shareholder of this company, and I definitely would stick to my shares. If not, some nuclear bomb is somehow dropping out of nowhere, which nobody could expect and never have foreseen it. Thank you very much, guys, for having you in. I hope you enjoyed the stream. I hope you will join as well again in the future. Comment and subscribe if you like. Be one of the first one who subscribed. Please keep in mind that was no financial advice. There's no guarantee for correctness. As you have experienced, I had quite a hard time with this Brazilian real, US dollars comparison. Don't take it too accurately, and thank you very much for your understanding and being patient in this regard. And thank you very much for joining. Stay healthy, and see you next time at the next call. It was actually the last earnings call for this season, which I will cover live. But I'm very sure that some other episodes of other formats, not only crunch time, but as well insights time, perspective time, there will be some very interesting hot stuff I will release. And yeah, so stay tuned, stay focused, and stay healthy. And yeah, see you next time. All the best, guys. Cheers.